Welcome, this is Bert Dohmen, August 2nd. Today we're going to talk about the emerging markets and the potential influence of the China stock market crash, which has gotten worldwide attention. The popular opinion of the analysts you see on financial TV is that the crash in China is not important. Too few people have stock accounts, although it's actually 90 million stock accounts or people that have stock accounts. In fact, there are over 280 million stock accounts belonging to different family members. So it cannot be considered inconsequential. And the percentage is the percentage of total people, forgetting that most of the people in China are very poor. So this is anyone who has any money was speculating in the stock market, and at the huge leverage that was utilized 5-to-1 for many people, they have lost everything. And when people that have any money at all lose everything, it's a disaster. So how can we take advantage of this? I believe that the emerging markets is one way. I would not speculate in China. That right now is basically the market, the government trading with itself. Rules have been put forth that no short selling is allowed. The big investment companies are not allowed to even sell stock. And if you're not allowed to sell, you obviously don't buy. So it's a totally fictitious market. If you really want the in-depth analysis, subscribe to our Wellington letter. The last issue was in-depth analysis of what is really happening and the potential influence and how to make money out of this. This is not a reason to run for the hills. This is a reason to get position and make some nice profits. So that brings us to the emerging markets. The chart here is of the ProShares Emerging Markets Fund. It's a 4-day chart, which means that each bar is 4 days of trading. And that gets it back to the year of 2012. And you can see here the long-term downtrend line has been broken. The other shorter-term downtrend lines were broken. And now we have an inverted head and shoulder. Here's the S, here's the H, here's the S. Inverted head and shoulders are bullish. So when this ETF rises, the emerging markets are actually declining. It's an inverse or short ETF. So it's a beautiful way to sell a market short by buying the ETF. And you can see here our proprietary indicator has given very nice sell signals. Here's a sell, here's a buy, here's another sell, here's a buy. So it catches these fluctuations very nicely, and this is why people subscribe to our services. We do short-term trading and Smart Trader, and also we have an ETF trader service, which is almost daily, and it helps you capitalize on these market moves. So here we have a chart formation that we're going to continue to follow up in our services, and this is where you want to put some of your money, especially as we get into late August, September. Thank you very much. I wish you a wonderful week ahead.